Most traders miss the big moves, not because they're bad traders, but because they exit too early. But what if you had a method to catch the trend and hold it until the very end? In this video, I'm going to show you exactly how you can hold humongous swing trades, ride the entire trend using Heikin Ashi candles. And the best part is, this is all going to be on gold. Deepak, this video is for you. He asked, may you please make a video on how to capture big trends? Love from India. Love you back. Let's get into it. Here's something that traders do not like to admit. No one knows exactly when the big trend is going to begin. Not me, not institutions, not banks. But here's the key points that you need to understand. You do not need to catch the bottom. You also won't predict the top. You just need to stay in once it starts. Ride most of the move and not all of it. And for that, you need higher time frames and a way to filter out the noise. That's where Heikin Ashi candles come in. Here's what you need to swing trade like a pro. First, you need a daily time frame chart for direction, trend structure, and support and resistance zones. Then you need to be looking at your 1 hour chart for entries using Heikin Ashi candles. Heikin Ashi candles are amazing because they smooth out the chart so you can see clean trends without getting out of your trade early. And lastly, support and resistance. This is where you will find the most logical breakout zones. Heikin Ashi candles, meaning average bar in Japanese, are a type of candlestick chart that smooths out price and makes trends easier to identify. They're calculated by averaging the previous period's open, high, low, and close, and the open of the current period is the average of the previous period's open and close. This averaging effect helps reduce the market noise and filter out minor price fluctuations, resulting in a cleaner chart that is easier to interpret for trend analysis. So basically, the red candles stay red for longer, even though there's green candles in between, and the green candles stay green longer even though there's some small price movement in that. The larger sized Heikin Ashi candles means very strong momentum, and the smaller sized Heikin Ashi candles means very weak momentum. So putting a visualization on this, you can have multiple large green Heikin Ashi candles, and then they start getting smaller. Then you see a Heikin Ashi candle with a wick on the top and the bottom, followed by subsequent downtrend Heikin Ashi candles that get bigger and bigger and bigger. The first Heikin Ashi candle in the color change is the one that you want to be looking at, but more specifically, the one that has no wick on the bottom. That's going to be a strong beginning of the new trend. And sometimes these trends last a very long time and you can have massive swing trades from this. Okay, so this is gold on the daily time frame. What I want you to do, and the easiest way to mark areas of support and resistance on this higher time frame, is completely ignore these candles and change your chart to a line chart. Then you will use your horizontal tool to mark up areas of support and resistance where price bounced off of it or broke through it and then used it as support. If the price can't get through it, it's known as resistance, and if it bounces on top of it, it's known as support. Now, once you've marked this up on the daily time frame, you'll be able to see where current price is and that it's sitting in between a level of resistance and a level of support. Now, all you need to do is zoom into your chart, transition your candles to Heikin Ashi candles, and you'll have a much clearer trend than traditional candlesticks show. And now that we've seen that this price rejected this level of resistance twice, creating a double top, and this showing our first no wick candle as a trend reversal, this is our potential entry. Now what you can do is take the chart to the 1 hour time frame, and if we're looking at the current time right here, it's 9 a.m. The bullish candles are starting to decrease in size, and we're getting wicks on the top and the bottom. Zooming in closer here, you can see wick on the bottom, wick on the top. So what you should be waiting for here is a bearish Heikin Ashi candle with no wick on the top. You can enter in a trade once that candle closes, and you're simply holding the trade. As long as you get bearish candles, you keep holding the trade. Now, if the trend stops here at this level of support that you had already marked up on your higher time frame, and the candles start turning bullish, you know that this downtrend is losing momentum and price may find support at this zone. But just to confirm it, you should go back out to the daily time frame, and if you see another gigantic no wick bearish candle, you can hold the trade until the next day, increasing your chances of holding a massive move to the downside. Here is your checklist. The daily charts must show an uptrend. The breakouts must be above the daily resistance. The 1 hour Heikin Ashi candles closes with no bottom wick. Strong body size, meaning a little bit larger, showing momentum, and that price is not in the middle of a consolidation zone. And here's a bonus tip. You can use small pending orders just above that no wick candle high. That way you don't miss the faster breakouts. Now this is where most people mess up. You enter in on a clean bullish signal, and now what? The answer's simple. You do absolutely nothing. You patiently wait until those Heikin Ashi candles tell you that it's time to exit. Here are your exit rules. Exit only when an opposite color Heikin Ashi candle closes. Ignore small pullbacks as long as the candle stays bullish. And this one is optional. You can tighten your stop loss after major swings are formed. This is basically creating a comfortable trailing stop loss. You need to let the market and the Heikin Ashi candles tell you when the trend is over and not listen to your feelings on this one. So just to recap, this is your step-by-step how-to guide. Open your charts on the daily time frame. Mark up your support and resistance. Zoom in to a 1 hour chart. Look for those support and resistance zones and bullish candles with no wicks on the bottom. Enter with conviction. Do not hesitate, and exit only when the Heikin Ashi candle closes in the opposite color. Now here are some bonus tips. Stick to trending pairs, like gold, like US 30, and probably even GBP JPY. Try to avoid ranging markets. If you're looking at an asset class that's just trading sideways for days, weeks, and months, this is not going to work for you and you're going to be frustrated. And the most important bonus tip is use alerts and notifications from TradingView to tell you when those opposite colored Heikin Ashi candles form, so you don't have to sit there on the charts day in and day out. You can actually spend your time doing your hobbies. Try this method out and let me know how it goes in the comment section. And if you have a question that you want specifically answered in video format, let me know in the comment section down below. Fan of the day.